Happy Wednesday, everyone. Allow me to check my audio first. Audio check. Can you hear me clearly? Uh, can anyone confirm if my audio is good before we start? And uh, may I ask Crown Star to if you're allowed to tag everyone so that we can start in a minute or two. My mic is off. Happy Wednesday, everyone. I'd like to test if my audio is working. Can anyone hear me? Happy Wednesday, Crown Star. Can you, if you are you allowed to tag everyone so that we can start now? Thank you. Okay, happy Wednesday, everyone. I will be your host for today's live market analysis, and I am an Elliottian, so expect that I will be analyzing the market using Elliott Wave theory. Before we start, just like what I always do, I will always give, or I will always, um, I will always do some recall of my previous analysis. The last time I hosted the live market analysis was last March 5, and there are a lot of interesting uh, things that happened after that live market analysis. By the way, I am trying to do live simultaneous live not only here but also in my YouTube account and TikTok account so that in the future perhaps um, we can ask more audience not only from the Discord community. So with that being said, allow me to start with a recall of my previous analysis. Last March 5, 2026, I hosted the live market analysis here in Blue Guardian, and I have uploaded the recorded session. And as you can see here in the 45-minute mark, uh, we have or I have forecasted already that the market will still go down with the following corrective structure. In Elliott Wave theory, this corrective structure is considered a zigzag. Zigzag simply because the first downtrend is composed of five motive wave, meaning one, two, three, four, five. Then after that, the wave B is a corrective wave in a zigzag correction. Zigzag correction, by the way, is the encircled wave A, wave B to wave C. Now, wave B is a corrective structure, so there are many possible corrective structure that can be used for this particular wave. However, we have identified already in my previous um, live market analysis that the structure of wave B is a zigzag. When I say zigzag, it is composed of waves for the five waves for the parenthesis wave A here, and then another five waves for the parenthesis waves here, which will complete the internal waves of the wave B corrective structure. Since wave A is composed of a motive wave or five waves down based on the rules of Elliott wave theory, I am expecting as well 5 waves down for wave B to wave C. And as you can see here in the previous analysis that I have done, as early as March 5, the downtrend or the dump that happened today, it was forecasted 2 weeks ago. So that's one of the advantage of Elliott Wave theory, the forecasting element wherein even though the price or the structure did not happen yet, but uh, when done or when market is analyzed well using the strict rules of wave counting and measurement, forecasting is possible using Elliott wave theory. So the next question here will be, where are we in terms of where are we in terms of the current Elliott wave counts? Please take note that in my previous analysis, I have labeled this as wave 1, 2, 3, 4, and 5. Now, I will be doing some changes, minor changes, in the internal wave countings of this wave B to C, simply because I have reviewed my notes and s- some rules were violated, especially in the internal waves of wave 2 to 3 here. Now, to let's do this. So allow me to take a screenshot of this first and then paste it on the my current chart. So here's the current chart of gold. Allow me to paste this one for comparison purposes, and then allow me to replicate it as well so that you will be guided with how I counted the waves using Elliott wave theory. So here we have the wave. This is the wave 1, then wave 2, 3, 4, and then 5. So this is the first wave or the internal waves of the encircled wave A here. So the encircled wave A, internal waves is 1, 2, 3, 4, 5. And here, next is the zigzag correction for the internal waves of wave B. So that means I need to count the waves here, 5 waves for wave A, 5 waves for wave A, and then another 5 waves for wave B, and then the correction that happened here is a WXY. WXY in Elliott wave theory is a correction composed of two zigzags or two ABCs. From here, allow me to plot the higher degree count, which is the A, the B, and then the C. Okay, now that I have replicated my previous analysis, this one, I have replicated, excuse me. Okay, now that I have replicated this, let us now update the actual chart. Now, just like what I have said, I will be modifying some change or I will be doing some change in the counting here because of the internal waves that I have noticed that were violated for the internal waves of this wave 2 to wave 3. Now, what will be the internal waves now of this first downtrend? Let me zoom using 15 minutes time frame so that you will see it clearly, or you will see clearly the internal waves of wave B to the current price or today's price. So this will be the change in my internal wave counts. So this will be considered as my wave 1. This will be my wave 2, wave 3, 4, and then 5. The wave 5 here, the reason why I am changing the initial structure like this into this is simply because the internal waves will not satisfy a impulsive wave 3. We know, for those who are always present in my sessions, there are three cardinal rules of Elliott wave theory. The first one is that wave 2 cannot go beyond the territory of wave 2 cannot go beyond the territory of the origin. So if this is my origin, wave 2 should not break that price for it to be considered as a wave 2. Now the second cardinal rule of Elliott wave theory is that wave 3 must not be the shortest. So if wave 3 must not be the shortest, then therefore it is obvious that in terms of length, my wave 3 here is correct, wherein the the length is 5.61%, while obviously wave 1 is the shortest and the second to the shortest is the wave 5. However, although it looks correct, e- even if we apply the fourth rule, or rather the third rule of, or the third cardinal rule of Elliott wave theory, wherein wave 4 must not go beyond the territory of wave 1. So if the territory of wave 1 is here, then wave 4 price should not go beyond that, or else it will violate the cardinal rule of Elliott wave theory, which is wave 4 must not overlap the territory of wave 1. Now, if we will try to look at it carefully, it seems that this is a valid wave 3. If we will try to look at my previous analysis, this seems correct in a 1 hour time frame. But if you will change it into the 15 minutes time frame, you will see that this particular counting violated the fourth cardinal rule in terms of the internal waves of this wave 2 to 3. Allow me to use the rectangle. I am I am talking about the internal waves of this one. Since this is the internal waves of wave 3, then therefore therefore the internal waves must follow the three cardinal rules of Elliott wave theory. Again, what are the possible wave counts of the internal waves of this third wave? The first, allow me to use blue. Okay. The first cardinal rule for the internal waves of this wave 3 states that wave 2 must not go beyond the territory of the origin. Okay, we have satisfied that rule. Second rule, wave 3 must not be the shortest. By simply looking at it, it seems that wave 3 is the, the possible shortest. So to confirm whether this is shortest or not, then you must measure the length of wave 1, compare it to the length of wave 3. By simply looking at the figures here, wave 3 is 2.05 while wave 1 is 1.79%. That means that wave 3 is not the shortest, which will satisfy the second cardinal rule of Elliott wave theory. However, when we talk about the third cardinal rule of Elliott wave theory, wherein wave 4 must not go beyond the territory of wave 1. And as you can see here, it's clear that wave 4 went beyond the territory of wave 1, or overlaps the territory of wave 1, which will which will not satisfy the third cardinal rule of Elliott wave theory, wherein wave 4 must not go beyond the territory of wave 1. And this is exactly the reason why I did not consider this as a possible wave 3 based on my original counting that I have shared to you in my live market analysis hosting last March 5, 2026. So from here, since this one violated the internal waves of an impulsive motive wave 3, then therefore the only way to correct my wave count last time is I will treat this one as a diagonal. When I say diagonal, I am referring to uh, a type of motive wave in Elliott wave theory wherein the internal waves of a motive wave is usually composed of five waves for wave 1, five waves for wave 1. We have one, 2, 3, 4, 5, and then another five waves for wave 3, and then another five waves for wave 5. Now, there are cases that by the way, for wave 2 and wave 4, we can use the a basic correction, which is the ABC. So this is an example of an impulse motive wave. When I say impulse motive wave, the structure is 5 3 5 3 5, meaning five waves down, three uh three waves up for the bounce, and then five waves up downtrend, continuation of the downtrend, then three waves down for up for the down of the downtrend bounce, I mean, and then another five waves down. That's the reason why we have here 5 3. We are talking about the number of waves per wave here. So five waves, three waves, five waves, three waves, five waves. So this 5 3 5 3 5 structure is what we call an impulse motive wave. Impulse motive wave. Now, a motive wave, there are two types of motive wave. It can be an impulse motive wave, or we also have what we call the diagonal motive wave. And what is this diagonal motive wave? Diagonal motive wave structure, instead of 5 3 5 3 5, the structure becomes 3 3 3 3 3. And this type of motive wave is what we call the diagonal motive wave. Now, based on the structure, it's obvious that this motive wave or five, when we say motive wave, we are referring to five waves. This motive wave is composed of five sets of ABCs. So five sets of ABCs, meaning we have here ABC for wave 1, ABC for wave 2, ABC for wave 3, ABC for wave 4, and then another ABC for wave 5. Meaning, since this cannot be considered an impulse motive wave, or we cannot treat this as third wave, because for this to be considered third wave, it should satisfy the three cardinal rules of Elliott wave theory. However, just like what I have shown to you a while ago, this particular part of the price will violate the third rule, which is waveform must not overlap the territory of wave 1. So the only way to correct this will be using an ending diagonal wave count, or a diagonal wave counting composed of three waves down, another three waves down for wave 3, and then another three waves down for wave 5. To show you the three waves down, we have here one. So this is the ABC, the first ABC. The second set of ABC is ABC again. And then the third set of ABC is ABC again. So since this will satisfy the wave counting of a diagonal motive wave, then therefore from this structure 1, 2, 3, 4, 5 originally from my original analysis, we will now change this into 1, 2, 3, 4, where 5, the fifth wave here is a diagonal motive wave. Please take note that this diagonal motive wave can only happen as leading internal waves of wave 1 leading or as ending internal waves of wave 5. I repeat, a diagonal in Elliott wave theory can only happen, this motive wave can only happen as the first, in the first wave, or what we call as leading diagonal, or the last wave as ending diagonal. But always take note that wave 3 cannot be considered as a diagonal. And that's exactly the reason why I am changing this initial counting into this counting. From here, we will now an objective analysis based on the strict rules of Elliott wave theory. So if this will be counted as my wave 1, then this sideways movement should be considered as our wave 2. Now to continue with my wave counting, since I have now convinced you on the internal waves of this one, then the next thing to do is continue the corrective count that happened here. So the corrective count that happened here is basically a zigzag as well, wherein we have 5 waves up and then a possible wave B. The wave B here can be counted or can be counted as a triangle wave B. So this can be considered as a triangle wave B. So basically we have completed now the internal waves of the wave A, the wave B, and then all we have to do is confirm the internal waves of the wave C. The internal waves of the wave C here is obvious. We have 1, 2, 3, then 4, and then 5. So that which means that the internal waves of the zigzag A, B, C here were all satisfied. Now that we have satisfied the internal waves of this one, what will be our wave counting next? So since we have completed the first 5 waves here, allow me to delete this one and just show you the higher degree counting. So since we have here the first 5 waves, then therefore this can be treated as the first wave. This will be the corrective wave, which is wave 2, and then 3, 4, and then 5. Now, if this is my wave counting, where are we now in the internal waves of this wave 3? Because the downtrend that we are experiencing right now from the breakout of this possible triangle here is actually the internal waves of this wave 3. So if this is just the internal waves of this wave 3, we may see a bounce for wave 4 and then it will continue to go down. So in other words, the downtrend is not yet complete. The correction of gold is not yet completed. I am not expecting that the price will create a new high in the next days simply because there are still, based on Elliott wave theory, there are still wave counts that needs to be completed. And in this case, what is the current count of this from this to this? Allow me to share to you my analysis that was shared to my community. By the way, I always share my insights of the market in my community. So if ever you are interested for a daily insight or daily live trade or live analysis, you can join my community. It's free for everyone who, especially those who are interested in learning Elliott Wave theory, or just simply what if you want to learn trading in particular. We have there a lot of traders with different strategies. As their founder, I am my main trading strategy is Elliott Wave theory. So going back to this analysis, allow me to share the shared analysis, my shared analysis in my community this morning. So this morning I shared the following analysis because I was expecting that today will be the breakout day, meaning once the this bearish last line of defense and bullish last line of defense will be broken, we may see five waves up if this last line of defense will be taken, and we will see five waves down if we break this bullish last line of defense. And based on the internal waves here, this I'm referring to the internal waves of this one, this particular price action. I mean this one. This is 1 minute time frame, by the way. So from this price action, I was expecting that the market will drop based on the Elliott wave structure that I have identified. Please take note that this structure is this part of the price action. This one. Okay. So based on the internal wave, so if I will treat this as 1, 2, 3, 4, 5 as my wave 1 and then ABC for my wave 2, then therefore I am expecting at least the completion of the first wave down here. The first wave down must be composed of 5 waves. So meaning this from here to here, it must be uh, composed of 5 waves down. Now, based on this structure or this wave counting, I have forecasted that the market will continue to go down or will break the last line of defense to complete the internal waves of this first downtrend here, which is the possible internal waves of this wave 2 to 3 to complete the internal waves. So what is the counting here? Let me just activate my previous counting here, and hopefully I still have the wave counts. So this is the analysis that I have shared this morning in my community. And as you can see, let me just change it in 3 minutes. From this analysis, it played out well. Next one. So from this analysis this morning, uh, the market did well as forecasted using the objective rules of Elliott wave theory. So once we reach or once we complete the internal waves of this wave E of Y, then I am expecting 5 waves down. By the way, this type of structure is what we call a combination. This is not a triangle because this cannot be considered as a triangle, because if I will label the entire structure as a triangle, it will violate the or it will break the trend line of a possible triangle. So the best possible wave counting for this one is a combination, and it is usually labeled as W, X, and then Y. Here, the Y is a triangle. So as you can see here, I have here the A, B, C, D, E counting, which is actually a triangle as part of the corrective structure W, X, and then Y. And now, what's next? Next is I need to count the internal waves from here down, down to complete the internal wave, 5 internal waves. Just like what I have projected here, as you can see, I am expecting 5 waves down after completing the internal waves of this wave E of Y. Wave E of Y. This is the wave E of Y. We have seen already the first 3 waves, and we are still on the fourth wave, and I am expecting another drop that will break the low of this wave 3 at 4,834.21. So if ever you are trading this sideways movement here, there's a big possibility that if you have entered a long position here, there is a high probability that this entry of yours will be taken because the internal waves based on the Elliott wave theory are not yet completed. Now, if you will ask me the internal structure of this wave 4, then it's easy to count it because the first wave is composed of 5 waves. So therefore, I will label this as wave A, wave B, and wave C. The wave B to wave C here must be composed of 5 waves. Why 5 waves? Because wave A is also composed of, the internal waves of wave A is composed of 5 waves as well. So in Elliott wave theory, an ABC structure or an ABC bounce like this one, the internal waves of an ABC bounce must be composed of 5 waves up, 3 waves down, and then 5 waves up. So the structure of the corrective structure should look like this one: 5 waves up, and then 3 waves down. The 3 waves down here can be a triangle or any corrective structure, and then another 5 waves up. Once we have completed the last 5 waves up of the internal waves of this wave C, that's the only time that the market will continue to go down. And as of now, if I will label this as my wave 1 already, assuming that this is my wave 1 already, wave 1, 2, 3, 4, and then 5, then once these internal waves are completed, that's the only time that I will consider uh, finding an entry for short around here. If I will base it on the wave measuring of Elliott wave theory, then the acceptable wave 4 retracement is usually at 236 to 0.5. Again, these are just the ideal values based on the rules of Elliott wave theory. But the rule actually states that as long as, based on the cardinal rule of Elliott wave theory, as long as wave 4 will not break the internal waves, or rather will not break the territory or will not overlap the territory of wave 1 here, this the wave 4 any can be in any level before this wave 1 structure. So in other words, my scalp or intraday bullish first line of defense or last line of defense will be here. So let me just an intraday or scalp slash intraday bullish last line of defense and the first line of defense. So in other words, the market or the correction or the bounce up for wave 4 should not break this price. Ideally, this is the only invalidation of an impulsive motive wave. So the price should not break this price. But since this is fifth wave, the internal waves of fifth wave based on my wave counting, then therefore, just like what I've mentioned a while ago, fifth wave can have an internal structure which can be considered as ending diagonal. So in this case, if I will consider only the first line of defense, then uh, I may have forgotten the other rule that the fifth wave can be a diagonal. And when we say in Elliott wave theory, when fifth wave is a diagonal, the price of wave 4 can go beyond the territory of wave 2, but must not go beyond the territory of the wave 1, I mean, but not must not go beyond the territory of wave 2. In other words, wave 2 will be the invalidation of these 5 waves up of wave C of wave 4. Okay? So, what will be the possible entry here? So, allow me to activate my personally coded um, indicator. In terms of my previous body candle theory, I don't see there's one. The PTL can be a good entry for shorting. However, based on the internal waves here in Elliott wave theory, if we apply measuring the rules of measuring, the acceptable wave C price level will be at 786 or 1% using trend-based fib extension, which is within the zero point 0.5 retracement level for a wave 4. So the conservative wave 5 target will be here, and then wave 4 will be within this retracement level for a possible wave 4 to wave 5 continuation. And the target for wave 5 may be the uh, previous month body low. This is the previous month body low. So the target can be 4,809.58. And as you can see here, that 809.58 is based on the monthly candle, but this one is just the previous month. The reason why it's PMB, previous month body low. So the previous month body low is here. So this will be my possible target for the fifth wave. So this will be my target for the possible fifth wave. So this is now my analysis on gold. Let's see what will happen in the next hours or days. But in terms of Elliott wave structure, after the fifth wave here, I am expecting a bounce, at least 3 waves bounce up, since I only do the live market analysis host uh, every bi-weekly or bi-monthly, I mean, then expect me to update this wave count after 2 weeks. But what's nice about Elliott wave theory, just like this one, as early as March 5, the dump that happened today was forecasted and expected using Elliott wave theory. So if you have a good understanding of the Elliott wave theory, or if you have mastery of that trading strategy, forecasting the market will be one of your strengths as a trader. Now, of course, I don't just rely on the forecasting advantage of Elliott Wave theory, I also refine my analysis using other trading strategies for confluence, like applying some uh, teachings of ICT, especially when it comes to quarterly theory or and the implied fair value gap. If I were to refine my entry here for a possible wave 4, I would like to find an implied fair value gap. Allow me to use the implied fair value gap by Lax Algo. If you're not yet familiar on how this implied fair value gap, allow me to share it to you, to quickly explain it to you how to identify an implied fair value gap and how to use it as a possible refined entry. So allow me to activate this and let me just scan. All I have to do is scan the market or the time frame, or change the time frame from 1 minute to the higher time frame. The 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 once I see an implied fair value gap, I'll explain it to you and how to use it as a possible refined entry. Let me just scan it first. 31 4 minutes, or 4 hours, I mean. There's none, I think, lower than 2. 145. There's no implied fair value gap in valid implied fair value gap. Let's change it to 30. There is an ongoing implied fair value gap here. So, excuse me. So if I'm going to use this for my refined entry going to the target of my wave 4, then all I have to do is find the 50%. This, by the way, this is the implied fair value gap. An implied fair value gap, although this is the current candle, the current 30 minutes candle is not yet closed, but this can be considered as an anticipated implied fair value gap. And what is an implied fair value gap? The implied fair value gap is a fair value gap whose middle candle is large. That's the first condition. The middle candle should be the biggest or the largest among the three candle pattern. The second condition to identify an implied fair value gap is that the left and the right candles must be overlapping each other. As you can see here, the left and the right candles are overlapping each other. All you have to do to find your implied fair value gap is get the 50% of the left wick and 50% of the right wick. So 50%, or the CE of the first wick and the left wick. So since this is not yet closed, we still have to wait for around 13 minutes or 14 minutes. Be, once this candle closes with a big wick candle here, then this will be a good example of an implied fair value gap. Implied fair value gap. Allow me to label it as implied FPG, or let me include the time frame where I have identified it. And I have identified it at 30 minutes time frame, so let me just put M30 implied fair value gap here. So M30 implied fair value gap. Now going back to the other possible target for my wave 4 here, all I have to do is scan the lower time frame to see if there's any implied fair value gap bearish. By the way, the bullishness or the bearishness of an implied fair value gap depends on the middle candle. If the middle candle is large bullish candle, bullish implied fair value gap. But if the middle candle is a large bearish candle, we call it as bearish implied fair value gap. Now let me change into 15 minutes, and we can see here a possible target for the the wave 4. So if I will refine my entry using implied fair value gap, then this will be my possible target of my wave 4. The M15 implied FVG. So this is the upper boundary, and the lower boundary will be here. M15 implied FVG. So even if I don't measure this, my possible entry for wave, the completion of my the internal waves of my wave 4 will start from here. By the way, if this will be your possible entry, then this will be your scalp, bullish scalp last line of defense. So if you will consider this analysis, then this will be your invalidation of these 5 waves up here. So once we create a new low here, the 5 waves up will no longer be valid, meaning we need to find the wave valid wave 0. So if it creates a new low here, then I need to identify the structure. Like it will probably be an A, B, then C here. So it can be like this one if it breaks the bullish scalp last line of defense, or or here as the bullish last line of defense. Allow me to change this into a different color so that you will be guided accordingly. So one is just a scalp invalidation, and the other one is the wave 4 invalidation. The wave 4 invalidation, uh, meaning once we break this one, then I am expecting the completion of the internal waves of wave 4 to 5 already. So from here, let me change it into 1 minute time frame. So based on this analysis, wave 4 must be composed of 5 waves. I will not uh, short the market unless I have seen these 5 internal waves already. So this can start from here, or this can start from here, depending on where the impulsive wave 3 will happen. But basically, if the first wave is composed of 5 waves for wave A, wave C must be composed of 5 waves as well. So this will be my setup if I'm going to do an intraday trade, but with the time remaining before the closing of the market, this analysis may play out not before the closing, but tomorrow until Friday. But but then again, just like what I've said, I'm still expecting that the gold will create a new low, breaking the low that created a while ago, or 3 hours ago. Yes, 3 hours ago. The low that was created 3 hours ago. So that is my analysis for the gold. Allow me to check first the chat, since I was too focused on my analysis. I was trying to explain it in the most simplest way, and so that everyone will understand. There's a question from TJ Babs. Okay, short will be confirmed after wave B is broken. That's a 3 hour, a while ago it was in the higher time, early time frame, but now my chart is in 1 minute time frame. I love counting the waves from higher time frame to the lower time frame. If I am live, I sometimes if I am doing live analysis or live trade, I even count the seconds time frame uh, as low as 5 seconds or 1 seconds time frame. Another question from Sala. So this means we will wait for a confirmation in point 4, then take a long. Yes. As based on the current chart, I am expecting the completion of the 5 waves up for the wave 4. So if you are a scalper or an intraday trader, then there's still an opportunity for you to find a long position targeting the implied fair value gap that I have mentioned a while ago. If that is within your, if that is in confluence with your own strategy, then by all means you are allowed to consider my analysis. According to Rizzi, so you're combining two strategies to come to a conclusion before executing. Yes, my main trading strategy is Elliott Wave theory, and then I refine it using implied fair value gaps. Now, if I want to do the timing or apply quarterly theory, I created here um, my personal indicator wherein it helps me identify the the AMD or the XAMD using the quarterly theory. In other words, I am not just a purely Elliottician trader and analyst, but I also use ICT. I even know how to do harmonics, and most of the trading strategies I've learned it, not just learned it, but I tried to master it to have a better understanding of the market. And upon in the many years of learning different strategies, I've realized that every strategy has a counterpart in Elliott wave theory. The in With that being said, I only use other strategies for confluence purposes. For example, if I want this morning, I did an analysis on this one. So if I have applied the quarterly theory, the timing here in finding an entry for wave to going down, just like the one that I have shared in my community, can easily be time timed using the quarterly theory. And then from here, if I will apply the Elliott wave theory again, I'm still expecting that it will continue to go up. Just like what I've mentioned a while ago, just look at this one. As I was explaining a while ago, I've said that if I want a continuation of this wave 4, my possible entry will be the implied fair value gap at 30 minutes time frame. As you can see, this is the lower boundary of the implied fair value gap, the upper boundary of the implied fair value gap. The lower boundary was taken already. Although this is anticipated, we still have 3 minutes left, 3 minutes or 4 minutes left, but we are already seeing a good reaction from my point of interest or possible entry for this 5 waves up. So although I was using Elliott wave theory a while ago, I still use the idea of implied fair value gap in refining my trade. Another question. Don't worry if you are a late joiner. I am currently live in my YouTube account and TikTok account, so perhaps you may see, or if you are interested in replaying this, you can still review or do it using my social media accounts. Okay. According to Risi, the left and right candles must overlap each other. The middle candle must be bigger or larger. Yes, that's correct. And then third will be uh, measure the 50% of the left wick and the right wick. And Whatever will be the price there will be your implied fair value gap. Inversion is different from implied fair value gap. Uh, there are many maximalists of invert uh, um, in invert or what do you call this inversion fair value gap, but mine is using implied fair value gap. I would like to rename it as statistical fair value gap, and perhaps I will explain it in the future why. I already explained this, but um, in simple in simple explanation, fair value gap is a statistical fair value gap because this fair value gap that appears in the chart are usually within the point of interest or point of control using the volume profile. So if you know how to use the volume profile, then usually this implied fair value gap can be found in this point of control. To show you, let's say VP. Um, Let me just hide the labels first. Okay. As you can see here, in the 5 minutes time frame, the point of control before the drop, before the drop is here. So even if I will check an implied fair value gap within this the red line here, I am quite certain that I will find an implied fair value gap. To prove my statement, so this is the implied fair I let's look for an implied fair value gap here. As you can see here, this is an implied fair value gap which is usually close to the point of control of the volume profile. That's the reason why I consider an implied fair value gap as a statistical fair value gap, because the occurrence or this implied fair value gap will not appear like the 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 rarity of this to appear is not like an ordinary fair value gap and an inversion or inverse fair value gap, because in when we say inverse fair value gap, if we say inverse fair value gap, this will be your inverse fair value gap. It is a fair value gap uh, that was impulsively broken by the next candles. So in other words, if you want to find an entry, then this will be your best entry for an implied fair value gap. But this may be revisited after a while. But what's nice about implied fair value gap, for example, this one, you can apply or you can, if you are trying to do a trend continuation trade, then all you have to do is use the upper boundary or the lower boundary. As you can see here, this 1, 2, 3 candle was created, and then after the third candle was created, the fourth candle here revisited the upper boundary of that implied fair value gap before the drop. Actually, if you are familiar with implied fair value gap, most of the reversals, if you will test, you may test this. I'm not just saying it, but you may test it yourself because I have tested this already. Most of the reversals in the market are are the reversals usually will happen with an implied fair value gap. So to to if you want to test it yourself, go and try implied fair value gap, and for sure you will I am quite confident that you may consider this as part of your entry or exit model. Okay, let me see if there's still other questions that needs to be answered. How would have timed entries on BTC bro on H1? Okay, I forgot to give you my analysis on BTC. I am done now with gold. Let us proceed to gold, or rather Bitcoin. Allow me to show you my my analysis. Okay, so last March 16, I have shared an analysis that I'm still expecting that the Bitcoin will still continue to go up in the 1 week CME gap. So if you are familiar with CME gap, all you have to do is type BTC one exclamation point and then enter, and you will see there the gap. The gap that I have identified is in the 1 minute or 1 week time frame, and that 1 week CME gap is from 77 to 84. Now, I'm still consistent with what I have forecasted since November of last year, that my corrective structure is an expanded flat. The wave B2C here, the encircled wave B2C, must be composed of 5 waves, and in this case, this is an expanded, unending, diagonal, expanded flat. So meaning 1, 2, 3 for wave 1, 1, 2, 3 for wave 3, 1, 2, 3 for wave C or wave 5 of C, meaning I'm still expecting that the market will break the February low and break it using 5 waves down. Currently, the price back then was still at 73, and then I gave them an update. The update is like this: A, B, C, where C is an ending diagonal. So once we complete or we fill the gaps in the 1 week time frame, I'm expecting that the market will continue to go down, 5 waves down, wave, breaking the low of February. So that will be my forecast for Bitcoin. And take note, as early as November last year, I have forecasted already these 5 waves down. For those who are always present in my podcast hosting, you can relate because they were aware that the market will drop. For if you are not with us, perhaps you will be surprised with the drop. But in my case, uh, we are not. We are aware of the possible drop. Okay. By the way, this is my community. If you're interested, you may join my community and meet some traders from different or funded traders from different prop firms. Unfortunately, our country is already restricted, one of the restricted countries in Blue Garden. So expect a lot of funded traders there, and most of them are using my trading system in passing their prop firm accounts. Thank you for appreciating the things that I do, and the things that I do and I love doing. I really like I really love doing live market analysis. I love teaching people. I love educating people, especially in technical analysis. And I hope from today's session you have learned at least a little. Okay? So I am now done with my analysis. Let us now proceed to the giveaway accounts. May I ask Crownstar to give me the numbers for the random selection? You're welcome, Rizzy. You're welcome, everyone. You're welcome, Dre. 5 random numbers from what numbers? crown star so that we can start uh, the random selection. One to 66. 1 to 66. So random number generator. Let me use this one. 1 and then 66 is the upper limit. I will be generating 5 random numbers, integers. So whatever the numbers, the results will appear here will be the winners for the giveaway account. And these are the numbers. Allow me to paste it here. You don't need to spam numbers because the numbers will be based on your seat plan based on the screenshot that was done by Counselor a while ago. So these are the numbers. Let's just wait for CrownStar to announce the winners, and then let's see who are the lucky ones. Okay, a while ago I was explaining that this is my entry. If you have considered this analysis while I was explaining it, you have gained significantly already. By the way, for the past how many days, I have been always doing live analysis on my TikTok or YouTube account. Currently, I am live on my TikTok. So if you want, uh, you can visit my profile. This is my profile. Just look for Jack of all waves. Currently, I am live, and then I am also live in my YouTube account. So if ever you have missed something, if you are interested with a particular topic that I have discussed today, then you may replay this uh, live. Imagine you have learned already from the session today, and if you have considered the analysis, you have also gained significantly already. Yes, this is uh, my YouTube account, and it will be posted by my moderator. So if you're really interested in learning technical analysis, Elliott Wave theory, implied fair value gaps, quarterly theory, and even other trading strategies that I know, I will be willing to help you learn those things because in my 6 or 7 years of trading experience, I have tried almost all trading strategies. But just like what I've said, most of these trading strategies has a counterpart in Elliott Wave theory. Since my main strategy is Elliott Wave theory, I only use other trading strategies for refinement. So these are the winners: Cheaper, Eduboy, Eduboy FX, Vishal, Joseph Ashford, and EURUSD Victim. Congratulations. I hope you have learned from this session, and may the waves be with you all. Thank you and congratulations, winner.